All right, y'all should have got a recording in progress message.
Yep.
Yep.
All right, so we're recording. I've got, what is it, 27th of August already. Good grief. So school in full session there, Professor Michelle.
Oh yeah. Oh yeah. It was 103 degrees today too. And then tonight came a big thunderstorm. So we had a gambit of things going on. So I'm not gonna get to walk outside. I have to walk inside. So when I turn off camera, you just know I'm listening, but I'm still here. So I'm gonna be
Okay.
walking in place.
Sounds
Where are you at,
De-stressing from all
Michelle?
that school.
Where are
Say
you
that
at,
again, Kevin.
Michelle? You said
What?
it's 103?
Yeah,
Where you at?
down here in Missouri.
Missouri. Oh wow, you guys got hotter than here in North Texas. We had a
Yeah.
nice cold front at 97 degrees.
Oh wow. Yeah, well that's usually what happens with school. It goes, you wait till everyone's there and then the temperature raises like ridiculously high and then we get back in another week or two, we'll be back to normal. But
Yeah.
yeah, it was just really humid today. And so we had a pretty hot day.
I've been making a fire like 3 out of the last 4 nights.
No, not me. Not me.
Oh, but I was down there, Oklahoma, DFW. Oh, to go down there first couple weeks of August, and yeah, so I got it. Actually, it kind of cooled down a little bit. That big rainstorm come through there. We had a couple
Yeah.
110 degree days, and then it really kind of cooled off. So I can't complain. Yeah, it's pretty nice. But hey, Julie, good to see you. Good to see you.
What's
So,
up?
Julie, Michelle, and Kevin. I know Anthony's not going to make it tonight, and Troy's not going to make it. So that's fine, because where I want to kind of take us is, again, I don't have a loss for words, and I speak too much. But I think what I really want to make sure I'm doing is, I mean, basically kind of duplicating, a lot of it's my own journey, but I think where most folks are right now, one thing I want to cover is again how important understanding risk is. Then two, I want to review that 10 EMA strategy, because when we transition from CFDs or the U.S. equities into the futures, there's some changes, and I'm so used to the gaps in the sentiment and emotion that comes with, hey, if a particular U.S. company price opens up, higher or lower than the previous day, high or low. I mean, there are some specific strategies and sentiments that come with that. When we go to futures, you have that continuation of 23 hours. So that the gaps are extremely rare, but it doesn't take out the fact that that same type of emotion and sentiment exists in that high volume US market. Okay, and what do I mean by that? US market brings with it a different type of trading than you're going to see outside the hours of the US market. I mean, that's the best way to say it. And that's where, hey, what was the high of the US market the prior day? That is a price zone to be respected, along with that Globex high. I mean, that becomes probably a good target. Same thing, what was the sentiment, or is there sentiment? Is there support price zone? Previous day of the US market low. So those are the things that's coming on our view, because we're just going to define specific criteria to then get into a 10 EMA trade, 1 or 2. We're going to hit starting last Monday. We'll trade up through today, and let's just see how we do overall, being very objective in our trade entry criteria. Okay. So I know I'm excited. Let me share screen first. Let me also just want to new. I have a different computer here. Okay, just got a notepad. And actually, I've kind of got some stuff written down here. Let me not have to recreate the wheel totally, but we can clean it up. I want to just kind of define the framework that we're trading in, and then we're going to flush out a couple nuances through our back trading. But let's define our rules-based strategy of 10 EMA as it pertains to futures and how we're going to trade it over the next week. Let's be consistent with that. Let's take the winners, let's take the losers, and just kind of see how we go. And then we can kind of look back and say, okay, what are some of the nuances of like, hey, we should have, or here's why we didn't get into that particular trade, and here's why we did or didn't. Give me 1 second. I'm bringing up one other document here. I just don't want to have to like do all the keystrokes twice. Okay, can everybody kind of see my screen? Is that way too small? I need to come in here and
It looks good to me.
okay. You can all read that. Do I need to make it bigger? Cool.
I got it.
All right. Let's just this is not inclusive by any means, but it's the framework. And again, it's pretty simple, straightforward. But 10 EMA strategy, again, there's really no more simple of a rules-based approach or strategy to trade with and win some, lose some, but win more over time. I mean, there's so many other things to study with the markets. It's a lifetime study as far as price action, market structure the day prior, liquidation, and so many other things that can give us an edge. But what it comes down to consistently profitable is a strategy, proper risk management, and consistent execution. Those three things right there, we're going to be successful, and 10 EMA is going to kind of demonstrate that for us here over spanning at least the last week. But 10 EMA strategy, okay, one of the things we're really looking for, and there's one caveat, but it's the exception, not the rule, but did we breach previous days high or low? And we're talking about the US market, not necessarily the Globex. Okay, those are the lines we're going to plot, because if our new US market future session opens above or below, check mark, conditions met, look for a 10 EMA entry and get in to the trade. If if it opens below the previous day's high and above previous day's low, so it's basically like an inside day candle, this is where wait 1 hour. Okay, wait 1 hour to trade, because we might be on an inside day. There's some indecision, and we want to see that momentum. There's a rare but an exception to that, and that is when, again, multiple confluences all coming together. We're in a strong trend, and it's just continuing, maybe back down towards the previous day's low or high. We'll kind of see a day of that, but when you're rejection continually above VWAP, multiple moving averages, you transition into the US market, and it just continues in that same direction. Hey, if you've got good risk to reward down to previous day's low, there are some conditions where we might take 10 EMA. It's rare, but we may take it before it's breached previous day's high or low, and before the first hour. Otherwise, we're waiting for 1 hour. Okay. So basically, entering opposite color candle, closing above or below the 10 EMA. Hey, foundation 101. Hey, we're not going to go long at resistance, and we're not going to wait for, okay. And then rule number 2 is, hey, another tool. This goes back to Jeremy Newsom original 10 EMA strategy. And it's been fun for me to count candles and kind of wait. And it takes anxiety. It takes some of the spring botness out of, oh my gosh, I just got a wick that kind of came in. You're going to have some candles or wicks be a little bit higher than maybe the preceding candles. It's not always going to continually go in the direction you want it to go. What we're going to demonstrate is, hey, the power in winning at least a 1.2 more than losing a full R, and what that does. And then what the 7-minute or 7 candles does for us, or waiting 21 minutes, it provides some structure, some framework. It's just some, hey, I decided to get into this trade under these conditions. I'm going to give it at least 20 minutes before I start second guessing myself. The results of that is, over time, you're actually going to win more of those trades than actually lose them. They could definitely come right back on you, and within the first 7 candles, full R loss, done. And if some of those conditions present right away, hey, let's not take the full R. However, we don't want to start moving our stops too quick, too early. We need price action or room to move. That's it in a nutshell. Any questions on those rules?
I
Got
think
it.
they're good. I hope tonight you can kind of just walk through them again. I've had a pretty good week, but I've also had taken some hits, but I like the 10 EMA and been using it. So I'd like to see you play out, like pretend you start a morning and then draw out the lines and then kind of watch that morning play out just a little bit.
Do it. Do it. Okay, so I'm up in Ninja. We got the simulator up and going. I think I've downloaded, well, I recall just within an hour of downloading the data. So it's hopefully, unless I'm really losing my mind, I'm remembering correctly. I downloaded the data. So disconnected all other connections, and from the control center, we just basically click on, close out of here, control center. We just click on the playback button, and we're ready to go right in and continue. So I'm just going to kind of come back here. Actually, I think I just hit continue. And there's, if drop a note in our group if you want kind of some in-depth ninja training, especially when it comes to simulator. Just drop a note in there, even if you're listening to this after the fact, a recorded video. I want to get an idea of how many folks out there are not comfortable with Ninja, how many folks out there do not actually use the simulation because they're just haven't really quite spent the time to do it yet. Drop that note in there whenever you get a chance. That'll give me an idea of the direction I want to go. Otherwise, we're going to jump right into playback mode here and go. Someone getting ready to say something?
Yeah, I did. I didn't quite hear the question. You want us to tell you if we're using this playback mode?
Yeah. I'm just curious of how many folks really haven't invested some time and understood Ninja yet, and the simulator in particular, because this allows us to experience the full emotion of candles developing on whatever time frame we want.
Yeah, I can just, do you want it in note or you just want us to talk about it?
Well, because there's a lot of folks that will listen to this video that are not here today. I'm kind of throwing that out to solicit some feedback on that. That way I may just take a Tuesday or a couple of Tuesdays and just focus on that, because there's extreme value in making sure that, hey, you can easily just bring up Ninja, have your historical data ready to go into playback mode, and retrade that same, situation different times or spanning multiple days. But it's better than just clicking through full candles and trading views, what I'm getting at. So I'm just soliciting the feedback from others besides here. But for today, we're going to jump right into playback mode and kind of go here. What we are looking at, again, the playback mode, this kind of goes back to like August 19th, 3-minute time frame, micro NASDAQ, MNQs. We've got a 200 simple moving average, Aqua. We've got this dashed red 100 EMA, and then of course our 10 EMA. So you're used to probably seeing all this other stuff on my chart. And yeah, well, I'm probably trading, I do have a little bit more on there, but we add those later on, and actually, the less we have at this for what we're trying to do with 10 EMA, the better. It can really start second guessing ourselves. We just want to come in and make sure we do have a pretty good understanding of, hey, what was the previous day's high and previous day's low. The problem I have with Ninja is we don't have clear US session from transition from Globex to US market breaks. That's one thing I don't really care for. And the 19th is on what day? 19th of August is a Monday. So basically we want to look at that preceding Friday. That'll be our starting point. So if the 19th is a Monday, let's look at the previous day US market. So you can kind of see down here on the bottom, this time frame here, it goes from 1 o'clock and it jumps right to 2 o'clock. So 1 o'clock on my screen, 1300, that is the close. That is my local time in Alaska. That is actually 5 p.m. Eastern Standard Time. That is the transition from one session to the next. So 12 o'clock is 4 p.m. Eastern Standard Time. So all I'm going to do is to kind of give us at least a reference visually is I'm just going to drop some vertical lines just real quick, and it'll be like at 12 o'clock. See, I want to make sure that's the end of a session. I'll make sure I'm doing this right. So 12 o'clock on this day would be the end of the session on the 19th, on the 18th, excuse me. So then we have to kind of back up a little bit more. Hey, 5:30, that's just local US time. So basically 5:30 to 12, 6.5 hours. That breaks up one full US market session. So I'll just kind of drop those in there. And this is where, TradingView is kind of handy because it's all built out. It's like I got the purple background for the Globex and transitions right in. But as I'm kind of going through a very minimal screen, I'm like, we need to at least know, hey, what was the previous day? So hence I dropped those two lines. US market closes at 12 o'clock Alaska or 4 p.m. Eastern, and it opens there. So then what's our previous day's high? Okay, that's going to be one of just a couple key areas that we want to make kind of decisions based on. So if our US market closes at 12 o'clock, we know that our, oops, I don't need that one. I don't want a line. I want a line that's going to go all the way across. So boom, we'll hit basically that's the high right before the US market closes. Yeah, I think I even got a template on there. I'm not sure. Nope. We'll give it one. We'll just call it. We'll call it that. Need to save one, I guess. I still want to have to recreate this line every time. And I reinstalled Ninja, by the way. That's another reason a lot of the stuff that you've seen on here before is not here. This is actually on a Windows server, kind of a remote login. So it keeps Ninja up running on a whole different platform. A lot more less latency, efficiency, and kind of keep things up going around the clock. All right, so there's previous day's high, and now let's just drop one other for a previous day low. Control C, Control V. We just duplicated that line. Let's just kind of drag it down here in the area of previous day low. Okay, those are really our non-negotiables as far as US market opening. And again, we'll just kind of jump over here because we're going to then speed up right to the 19th. US market opens. We just kind of want to see where that is. See where that is. Is that correct language? So 5:30, let's just kind of drop that right in about that area right there. Again, we have to kind of build framework. We're going to keep it simple and go, we're going to use this slider, August 19th, 8 p.m. Okay, we want to get to 19th is Monday. Is that Monday? You gotta be kidding me. 19th is Monday, right? 19th is Monday. Well, so here was the day that we really wanted to trade first. So we're going to start on Tuesday. That's fine. So this basically becomes our entire Globex session. So here's 19 August Monday. Let's show our rule first. We will do kind of a cheat run to kind of show. I'll talk through it, Michelle, on what it is we're going to be looking for on Tuesday. But Monday, we're going to kind of see if we end up having a 10 MA strategy, what we've gotten in and why. And then we'll go into simulation mode on Tuesday and following. So we got to jump clear over here to actually US market opens right here at 0530. And this would be the 19th Monday, August 19th. Is this easy to see on here, or is this very difficult to track? Don't have much on Ninja right here. It's very minimal.
I'm following just fine.
Yeah, I think it's easy to see.
Okay, excellent. That's good feedback. Appreciate it. So we will just drop the 530 or the US market open line right in there. We're just going to hastily kind of glance. Say US market is opening right here. I believe this is the 19th. This is a Globex high. Yeah, I don't want to just keep backing up. Here's 05. So here's pre-market US market on Monday the 19th. Here's really where we're coming from on that Friday. So our previous day low, again, we're looking at around right clear down here. You see how low we are from a US market. It did open extremely low. So we've got a current price opening on the 19th is clear up here. US market previous day high is right here. So we're going to say, hey, it's at 602.25. Look to the right over here. You can kind of see the price. But during the US market open, see it closes here at 12, but we did right around this 600 mark. So this kind of becomes our previous day high. Right here is 1 hour. So we do not breach previous day high on the 18th when US market opens, nor did we breach or are we below the low. So current price on the 19th is opening somewhere in between the US session's previous day high or low. Does that make sense? I don't want to draw these green lines over and over again. We will move those forward as we go. But what we do know as we talk through this first scenario is price opened up in between our US market, so highs and lows. Why is that important? What does that mean? That's just one of the objective conditions that we kind of want to set out to help us in our decision making. Take some emotion out of it. That 5 minutes, that 15 minutes, that 30 minutes, there's so much volatility, it's moving. Odds, your odds of entering a winning trade substantially increase when we're trading with the sentiment and maybe even a little more decision that the market may obtain once some of those emotional prices have been obtained, like previous day's high. There's a lot of emotion attached to those price zones. Are they going to become support, reach through them, support, and a trend continues? Or are we looking at kind of a rejection, and then we have another full candle to kind of mirror the previous day candle? There's just a lot of emotion, and there's an edge that comes with considering that as a rule. But did we breach high or low? No, not on the 19th. However, at 0630 Alaska, right in here, is when we actually do have the 1 hour achieved. So once our 1 hour is achieved, or the previous day high or low US market's been breached, then we're good to trade. You got a green light. Okay, all we want to look at here is good to trade right here, 0630. Here's 1 hour. We're on a 3-minute time frame. Is this the first bear candle to close below the 10 EMA?
Yes.
Okay. Yes, it is. Here's our 10 EMA right there. So we look at, we could even write it on here. Again, just easier to write on a notepad. I think it is to recreate. There's long and short tool, and TradingView is pretty cool. That's where it's fun for training, but we've got to kind of work through some other stuff. But okay, I just want to start down here at the bottom. Let's go. I might be able to. Nope, not got a series. Okay, data box. The only reason I'm bringing that up is when I put that cursor over this first candle closing below the 10 EMA. Which one was it? My data box right on top of it. Okay, so this is our candle in question right here. When I put that cursor in there, that low is 9. Sorry, it's, see that 19,543.75.
Yep,
Yes.
I see.
Okay, so we got 19. I think it was 543.75. Okay, that's where we're looking at getting entering in. So boom, we just draw a quick line. There's our entry. Boom. Okay. Now at a minimum, first preceding bear candle close, and above our moving averages. Minimum, your stop has got to be at least up into here. Now, do we like to have stops above like that high of the day or that high of the pre-market? Yeah. Are we always going to get it? You've got to consider your size, when you start going that large. But what we're kind of looking at here is we've got a pretty good trend kind of continuing. But this is pretty strong rejection right in here. So again, from just kind of a 10 EMA perspective, we come in here, we can drop a line. Let's actually do these horizontal lines. It'll be a little bit easier. At a minimum, our stop is going to be above this candle right here. And so that is at, what was that candle? We're going to say a little bit higher than the 573. So we're going to say about 575. We'll say about 2 points above that. You guys see where I'm getting that price?
Yes, that's making sense.
Okay, so 19,573, and all it is that gives us a stop, and now we actually have an entry price. So I miss our long short tool. I want to bring up Ninja for that reason. Maybe we do on this demonstration because this darn long and short tool is so cool. So we're jumping over here at 19. That doesn't really help us. We looked at the 19. We determined over here. Here's where May the 19th, right? So I'm the right asset. S&P is Goldman Q. Okay, there's the 19th. So here's This is a whole different day. Is this the same day? I'm in queue, 3 minutes. It's pretty. Why does it look so different? August 14, 15, 16. That's why. There's the 19th.
Maybe pull it up on a larger time frame if you can, see if you can figure out what day it is. A little easier.
Yeah, I just once I
mine's the same.
start rolling through, I roll through on a simulator, but kind of going back and then not having all these indicators. But I see the 19th here.
Oh, I see. I didn't see that. Yeah.
Yeah, so that's where I was kind of just squeezing them together here real quick to say, okay, give me some dates, because if this is the 19th, then this is 0530. This is where we are right here.
So yeah, I think you were actually on the 16th.
That's what I was just when I was looking at TradingView, I'm like, I wasn't even on the 19th on TradingView looks so different. So we were actually on the 16th. Well, let's look at the 16th. So all we were kind of looking for was kind of a long and short tool. So now, gosh darn, it makes me want to, as a demonstration, jump back over here. We were on the 16th, right?
Yes.
All right, we're going to walk through a couple here this way here. We got to speed things up a little bit.
There you go.
All right, so everybody's familiar with here. Simulator is important. It allows you to go in, we'll build a template. You get to practice what we're going to actually crawl through here. And we're going to simulate a couple of them, but 533, we're below previous days high and low, which we can easily see over here. The highs clear up here, the lows clear down here, which we looked at in Ninja. So we wait basically 1 hour. Here's 6:30, the 1 hour mark. Now we're going to come in here, our short tool, first bull candle closing below the 10 EMA. Enter that, enter there. Our stop is up above. Make sure you're above this, strong moving averages. Being above VWAP is positive. Being above your 10, non-negotiable. Being above your 20, for the most part, non-negotiable. When you're above your 10 and your 20, and we've got these rejection here and these lower wicks, again, we've got confluence of we're below the 200. VWAP's coming down, 100's coming down. Do we have an opportunity for a 1.2 on a 10 EMA? Absolutely. Put it in. Done. It's a winner. The 10 is, were we objective with it? We waited 1 hour. Okay. We've seen kind of some rejection here. We've got larger time frame and moving averages saying, hey, we could not come up, and the bulls, there's no buying strength for this to continue up higher. We don't even make it up into this area of support. We kind of get taken out right through here. But what we can really see and why we can be objective on this first 10 EMA, first bull candle closing below the 10, taking a little bit of subjectivity out of it, is because it's the first one for one, and we waited for that first hour. We can overanalyze and say, well, do I want to take out this low first? That stuff can kind of come into play. But I want to show as much objectivity, rules-based, on a spanning about 5 or 6 days and what that looks like. And then the homework or the challenge is for you to go and kind of reproduce the same and start experiencing. It's like, good grief, if I just follow a plan, have some consistency in where I put my stops with the right size, I do win more over time following this objective strategy. That's the goal here. So here's,
so you would have won that one, right?
yep.
And then would you immediately then you'd stop and you'd go, yay, I won. And then you begin to start watching your
That's
next move.
that is a great question, and I'm gonna go ahead and log. We're gonna go ahead and put first trade, and that's on the what? That's the 16th. We're gonna put the 16th. I'm just writing here on the right side here. Because we'll go ahead and separate. Hey, if we're a winner at 1.2, you know, what's our win rate on follow-on trades? Are we just as consistent with that second trade as we are the first? Where do we start once we recognize, you know, because we have to kind of navigate a double bottom here. However, we got beautiful trend and a support line over in this area. So that's one of the things we really want to kind of capture, Michelle. Great question. And we'll track. And when I say track, I'm just going to go ahead and kind of write, hey, first trade on the 16th. I'll do the second trade. And we'll say it was a 1.2 winner. Actually, let me not put a dash there. That was like a minus sign. Let's go first trade, 16 August, and we're going to say positive 1.2. Okay, let's do a second trade, but if we're going to do two trades, let's do two trades spanning 5 days and see what it looks like. Let's do one trade. We can break it up if we do two. And what I want to kind of show is when you guys go back, you can go back then, beginning of August, follow the same approach, back trading, journal it, write down some notes. What worked, what didn't, what is a nuance that kind of pops up. A couple of them that kind of came up talking with Julie the other day is like, hey, is it the US market high or low, or does Globex kind of set it? And I go back to that sentiment of the US market volume that stands alone by its own kind of emotional connection of what can happen. Now, Globex high, Globex low must be respected. They are absolute targets, mind you, in a lot of cases. For this particular exercise, we're just going to stick to 1.2 because we're going to see what 1.2, 1 to 2 trades, 1 or 2 trades, most days, what that looks like. And again, you go back August, then you do it again in July, then you go back in June, journal it, and then you gain that confidence. Like, good grief, I was still wrong, you know, a third of the time or half the time. But because I was consistent with my reward of at least 1.2, and I learned how to lose less than a full R on most trades that did lose, I actually funded my account. That's what we're going to see here. That's what we hope to see. So here's a 1.2 risk. That's going to be a big one here because I've got a whole 1 hour discussion on risk that I can't wait to share with everybody. So our risk here, we're going to go ahead and just put it at 250, which is 1/6 of the total drawdown of a 25K account. So we have to lose a net 5 times to actually lose that account, assuming we don't go up, almost hit a target, and then lose a full R. Now we're actually down 3 Rs of our drawdown. That's what I mean by that intraday drawdown. And that's where there's an edge for some of these prop firms on the intraday, and where we have to cut this risk in half to actually have a true risk of 250. I got to share this. This is too big. Intraday drawdown. If you think your risk is 250 right here, and if you only come back up to here, you're losing 250. That's where I think most people are kind of having a false sense of confidence in their risk plan. If your risk is 250 and you don't quite hit your target and it snaps back and takes you out, your drawdown is down over $500. Even though realized loss is only 250. So your true risk is double your reward when you're just shy of your target and you lose a full R. That is so important to grasp. Your true risk is going to be just slightly lower than double your actual target. Any questions on that? Because I want you to chew on that and think about what that means. True risk is what we have to actually have as the foundation of our trading plan. Because it's not a matter of if, but it's when you're going to have some trades go against you. And the reason this is so significant to me and important to me is I am starting to work some of the bots, a little bit more automation. And I'm going to walk away. I'm not going to sit there and manage bots. That's the whole point of it. You know, we're working, we got W-2 jobs. We want to go travel, visit family. We would like to scale our trading business to have some additional cash flow. There are some other things, and we'll talk about that going forward. But the reality is, if we're not managing the trade, sitting here babysitting it, we have to realize our true risk is just slightly double of what that R is. Because if this was a bot, I'm not managing it. I do not hit the target here or here. Let's say I'm just a little bit below that. Well, my full risk of $250, I didn't quite hit the target. I got stopped out for a full 250, but my drawdown the next day, or when I come and look at my account, hey, realized loss, only 250. Cool, not a big deal. I lose some, I win some, only lost an R. But my drawdown is down 500. It's down 2R. Any questions on that? That's significant. Because that's the difference between that and like maybe an end of day drawdown. At the end of the day, I'm only down, you know, my 250. So as a rule for me, I take what my risk or my drawdown amount is. So if it's a 50K account, I got 2,500 divided by 6. If it's a 25K account, I divide that by 6. Well, that 25K divided by 6 is where we come up with that 250. But what is important, Michelle, Kevin, Julie, is understanding that true risk that you're exposing yourself to on this one trade is not 250, it's 500. Just right under 500, because if you don't hit your target and you lose the full R, you lost your drawdown is down 500.
Is there a difference between intraday drawdown and daily drawdown?
The daily drawdown, Michelle, is we hit the target. We don't, same scenario. It's a bot, it's automatic. End of day drawdown says, hey, it's not my unrealized high that my drawdown is trailing to. So at the end of the day, you know, I start right at 50K. At the end of the day, I miss target, miss it a second time, it pulls back. I lose a full R of $250. Well, what's different between that end of day is my trailing drawdown is only down by $250 now, not the full 500.
So I guess the question is, intraday, you can blow up an account intraday by drawdown if you weren't careful. But does that reset? I mean, you're still going to lose. So the next day, you still have the drawdown from the intraday the day before?
Absolutely,
Or
absolutely.
does that start at the daily drawdown?
Nope, your account size of, say, a 25K account is not a 25K account. It's $1,500. We have to understand that we have $1,500 to manage to stay in that account. If you have this scenario right here, you don't quite hit target, so just shy of $250, but it was unrealized. You were profitable, $250, but then it comes back and then you end up losing $250. That's a $500 drawdown. The next day when you come in, you log in, instead of having a full drawdown of $1,500, you only have 1,000.
So it'll carry from day to day.
Exactly. That is your balance in the account. That's the funds you have to work with. Now your
Right.
buying power remains with the size of the account. But you have to say, wait a minute, I no longer have one trade of only 250 risk. I now, instead of having $1,500, I only have 1,000. We have to look at this through the lens of true risk.
And that's the drawdown number, not necessarily the amount in the account.
That's exactly right. That's exactly right, Michelle. That balance, that realized gain or loss, in this scenario right here, you only have a realized gain of minus $250. You're like, hey, that's
Right.
only 1/6 of my $1,500 I have. That's within my plan. That's my risk management. I'm good. Problem is, this particular trade here, or this scenario, you actually drew your account down by 500, even though the realized loss was only 250. There's only one R, but your actual money that you have to stay alive and trade in the account is down by 2 R's. So you no longer have your 6R cushion. One trade, you took out 2 R's. You risk 2 R's to try to get one.
Right. And
1.2.
I guess like on this screen, I'm asking, okay, down in the bottom right corner, you've got the 19,591 that's changing. Would that show the $250 loss, or would that show the $500 loss in risk? Versus on some of them, there's a drawdown. There's a page where you can see the drawdown number as well. Those two numbers aren't really the same. They affect you the same, but they don't seem to be the same on my account that I'm looking at.
Your trailing max drawdown and the actual realized profit and unrealized profit are definitely not going to be synced. Careful how I'm saying that. So if you're seeing unrealized gain $50, $100, okay, if you start that trade with full availability of your drawdown, meaning 1,500 on a 25K account, and you see it go up $50, well, your trailing drawdown just it's also going to show $1,500. Now, the actual price of where that $15 being counted from is going up with the actual candle. As the price of the asset goes up, so is the actual price, or $1,500. That basis, you're snapping a new chalk line of where your actual $1,500 drawdown is going to happen. So like right here, as price, let me jump back over here to trading view. As price works in our favor, our unrealized balance is going up. If our hard 1,500 loss is up in here, it's moving down with the candle. The problem is, when the candle decides to come back this way, this trailing drawdown does
Okay.
not go back up, and it will
I
not
got
tomorrow. It will not the next day.
Then you start there. Mm-hmm.
Yep. So true risk in an intraday drawdown is double your whatever your reward target is. That's how your risk plan must be written and executed. And that's just utilizing, hey, I believe I'm going to win 6 net 1.2s or more before I'm going to lose 5 net 2 losses or more, 5 full R's. Now I say net because they don't have to be in order. It's like, hey, over time, hey, once you actually lose 5 full R's, while you still have a trailing drawdown in effect, you're going to blow the account. That's based on $250 R unit in a $1,500 account. And I say 1,500 because that's the drawdown amount in a 25K. That's really the magic number. That's what we're trading with. That's important. Now you're like, well, why would I just not do end of day? That seems stupid. Well, then it becomes math, because you look at, I'll utilize Top Step as an example, end of day. Okay, this same trade my drawdown amount would only be reduced by $250, not the full 500. But I've now got to go to a target profit of 3,000 versus 1,500. It's a $2,000 drawdown with a target of 3,000. So your trading style or methodology might be just fine with the intraday, Or because I train and I probably trade more. It's like, I'm looking for support. I'm looking for, support down here. I'm looking for resistance. I understand price is going to kind of come down, retest a low. I got a double bottom, comes back up, S curve, it comes down, continues up, it comes back down. I've got trends. If I can get into a trend, I'm good. So I expect pull downs. That's normal price action. Well, if we do not understand the double risk that's really at play on every one of these pullbacks, that's where we, instead of having 6 net losses to lose an account, it's 3. You lose 3 times, game over, potentially. That's what you have to live with and manage and understand. But I can cut my risk in half on an intraday account that has a target that is half of what an end of day target would be. And I'm going to meet my objective just as quick. So what I mean by that is we need to understand this double risk that is inherent in an intraday intraday trailing drawdown. And instead of a $250 risk that we have here, we need to consider half of that. What is 125? We're like, Jake, that's 125. That kind of sucks. It's going to take me forever to fund. Well, not really. Not when you take 125 times 1.2. Okay, that's $150. Times that by just 10 trading days, 2 weeks, you've passed an evaluation. Okay, let's look at the end of day. And again, just real hasty math to kind of to paint a picture. Both are good, but from your risk planning perspective in an intraday, you need probably at least 12. You need to divide that drawdown amount by 12. And I just say 12. I'm throwing 6 as my basis for any type of automation where I can walk and leave things alone. Hey, I need to lose 5 in a row. And that's why I want to divide by 6. Actually, I lose 6 in a row. I lose 6 in a row, game over. I will have a trading plan that I'm comfortable with, that if that happens and I'm following the trading plan, I'm happy. I'm okay. But 3 in a row, when I lose a full R and I just miss my target a little bit, that happens too frequently. And that is going to blow up too many accounts. So let's take Top Step as an example. It's got a $2,500 end of day trailing drawdown, but you have a $3,000 target. Let's just divide this by 6. So that gives us $416 as our profit. Okay. Well, 416 times 1.2, $500. Okay. So what is 3,000, which is your target profit, divided by $500? Okay. That's 6 days. If you look at it, 1/6 of my trailing drawdown amount. Did I do that right? Did I divide? So it's 2,500 divide by 6, 416. So we times that by 1.2, then 500. So 6 1.2s will actually hit a target in that end of day drawdown. If we do 125 times 1.2, that's where we came to 150, and we need 10 to get 1,500. What's interesting is if you take that 125, true risk is 250. You guys tracking with that?
Yes.
Yep.
True risk is 250, where end of day drawdown, when you have a good stop, a good take profit, things settle. Hey, your true risk is actually what you're risking at that moment.
Now, this is a really silly question, but and I'm sorry, I don't even know how
As
to
a
ask it,
professor,
but
there's
did
no
we
such thing as a
choose-
silly question.
When we chose our account, did we choose we were doing intraday versus day risk, or does that just happen because of the space and the size that we allow it to happen, whether we trade a lot or not? I'm confused on how we know which angle, or whether you're doing intraday risk or whether you're doing daily risk.
Yeah, and that's a great question, Michelle. I'm guilty of kind of getting into some of these accounts and really not knowing. And so I'm learning. School of Hard Knocks, unfortunately.
Amen.
Taking this knowledge now with the Apex firm, and if I would have adjusted my risk plan accordingly and say, hey, thou shalt not ever risk more than 1/6 of my daily drawdown, and I need to understand that true risk on the intraday drawdown is actually up to, just shy of my actual target amount. So if it's 1.2, it's actually just shy. It's shy of the $150. So I'm losing possibly like 149. And if I lose that full R, well, not only is that 149 drawdown going to go against me, but then the full 125. So that's 275 that I actually lost just by missing my target by a tick or a point. So true risk is actually a little bit more than an R unit in that scenario when you get over that R and you get into that 1.1, 1.8, and just, it happens. We miss it this morning. I missed, well, I moved my stop at 40 minutes, but 2 candles come up and I was just literally a point shy of hitting my target early. I'm like, I'm going to finish my shower anyway. And it whipped back up and I was good to go. But again, it's just the idea I'm thinking about. I'm like, twice I miss it by a point. Is that exit criteria? Probably should be, but it was a big wick. It come right back down. And I overall market, I'm like, no, we've got a little bit more in there. So I just moved my stop up between where the last stop was and the difference between what I assessed as the next valid pivot point. And then 2 candles later, I hit target. And again, that's part of that wait 7 minutes. Don't get hasty, move the stop up too quick. Missed it by 2 points. It was still early in the session. Overall, larger time frame saying, hey, there's still some bullish movements out there, so we're good to go. But what this does for me, at least, and what I'm hoping to convey is, if we kind of understand true risk in this intraday, when you do your R unit, and let's say if you're accustomed to say 300, in a $1,500 or 25,000 account, we think 300. Oh, that's pretty small. 3 times 8. I've got basically like eight risk units. That's a small amount. Well, you're actually risking almost half of your account in one trade, because six if you're risking 300, well, that's $600. 600 of 1,500, that's over a third, but less than a half. One trade. So that happens twice. You're like, man, I just missed my target twice, but hey, I followed my plan. I only lost even 3/4 of an R. Third time that happens, it's game over. And unfortunately, the frequency that we do lose, 2 and 3 in a row does happen. It's not a matter of if, but when, and you may even be following your plan. So the risk plan must account for that. And that's where 6 is a magical number for me. Just, I'm gonna win 6 before I lose 5. That 5 is that kind of that cushion. But understanding true risk in this intraday drawdown, that to me is a light bulb moment. And that explains to me so many reasons people are losing a lot of these accounts. They're small, they're only 1,500, they're not 25,000. We're risking $300 and $400 and not understanding, hey, true risk is double that. And we wonder why we're playing catch up so much. Does that add any value? Because that's applicable across any and all firms. If it's end of day, hey, what is your true risk? Hey, it's a little bit more black and white. Now, if you hit that hard breach intraday on an end of day, the account's going to close mid-session. So you still can't say, hey, I thought this was end of day. Why is my account no longer eligible? Well, you got to realize that actual loss limit, hard breach of 2,000, once that's achieved intraday, that account is closed. However, up to that moment in time, when that hard breach of the 2,000 intraday is achieved, you might only be at 1995, but then price goes your way, $1,000. And so at the end of the day, you're like, oh, okay, I've actually got $1,000 remaining of my account. But if it ended up breaching that 2,000, that hard breach, intraday, game over. Your account's going to be flagged. It's going to be ineligible. It'll close you out. So intraday will blow an account on an end of day model, but it's just when that amount is actually breached. It's not going to be held against you, that unrealized profit, when it snaps back or goes back and you decide, hey, I'm not going to allow it to go negative. I'm going to at least take some profits off the table. That's where that end of day it works in your favor, because at the end of the day, you didn't reduce your drawdown by that price coming back. And then you're like, hey, I've got to go. I've followed my plan. I'm moving my stop into the green. I cannot lose. It's a great day. End of day, any of the profits unrealized before it stopped you out is not held against you. That's powerful. You got to go twice as far to pass an evaluation. You got to go 3,000 versus 1,500. But your risk, true risk, is a little bit more black and white that way. But if you understand the intraday, you make it black and white by saying, hey, whatever my actual risk that I used to trading, hey, true risk is double that. And then just cut your risk in half. Because again, 1,500, divide that by 10, hey, $150 average over time, 2 weeks, you're funded. And in 2 weeks, you've maxed out how much you can even get a payout on that account. So that's another interesting thing to think about. It's like, well, for the first 3 months within Apex, you cannot withdraw more than 1,500 in a 25K account. So if 1.2 of $125 is that 150, I'm maxing out what I can even withdraw for the first 3 months. Now, we want to build that cushion, having a little bit more than 150 is kind of cool. That is our goal as we follow a very stringent risk plan to pass an evaluation, very consistent, tight, rigid risk mitigation plan to get up past where that trailing drawdown stops in the funded account. And then you still continue it, but your trailing drawdown stops. So now instead of having $1,500 every day, maybe, it shoots up to 2,000, and it comes back down 500, but you're like, hey, I still got 1,500. Yeah, because you achieved that $2,100 in a 25K account. It's locked in at 25,100. So this is not indefinite, and it doesn't matter what size of the account, but to pass an evaluation correctly and to have the correct risk in place to successfully navigate through that first payout and beyond, you have to understand true risk. Just got it. That's the best I can give you. And I just believe that's probably one of the most important things. We've talked about risk all the time, but have we really understood it within this futures space, intra-drawdown perspective? When we say, I want an objective methodology, I want, when these conditions are present, I want to enter my trade and I want to walk away, because Jake keeps telling me, hey, just be consistent. Over time, you're going to win. And that's true. But do we have the right size? Do we have the right R unit? And what I've just learned through, like with Apex and this intraday, that I'm double the risk that I thought I really was having. Today, that was just an incredible eye opener for me, because I actually I've got a strategy. It was on a bot, and over time, it nets 2.2 R. Well, I go up a little over 2 R, and then it comes back down to the red. And I'm just looking at that. I'm like, if I just lose 1 R, my true risk on that trade was 3 R's. So I'm only talking with a 1.2 reward and just coming shy of the target. But today it was a 2.4 actually. I went up to 2.2 and then it rolled back into negative territory. And I'm looking at that. I'm like, if that comes down and on my 150K account, that would have been over $2,300 drawdown, almost 50% on one trade. Now, back trading, historical, optimization data says, hey, this actual setup doesn't lose more than 2 consecutively over like 4 months that I was studying it. But 2 trades back to back, all of a sudden that puts me down to 46. The third one, game over if it just goes against me for a second. That to me was a huge eye opener. I'm like, I got the wrong risk and I'm dividing by 6. I think I'm on point. No, I would just set myself up to blow a bunch of counts, not if, but when, even though I had some great data that I was executing consistently with, I did not have the right risk in place.
Yeah, that's helpful.
Yeah, it's powerful. And then all of a sudden it makes that 125. It seems small, but actually that looks huge when I put it in the perspective of what does 1.2 of that do over 10 days, over 12 days, when there's objectivity in my trading plan? Because now I've got true risk. It's like if I almost hit my target and then it comes all the way back and I lose for a full R, I'm okay with that now because I'm not losing more than 1/6 of my actual available drawdown. And I have to do that over 5 times in a row or net before I actually am profitable. And that's where I believe I have an edge. Following a plan, having the right risk. The edge is, hey, I understand trend, larger time frames. That's my edge. But where the house has an edge is on this intraday trailing drawdown when people don't understand the risk, true risk associated with that. That's where they have the edge. With that knowledge, we take that edge back. They want us to have that knowledge because they want us to be successful. When you're successful getting payouts regularly down the road, they're getting 10% of all your profits. They want you to be successful, but you got to realize until you're a proven, consistently profitable trader, they're making their money off of you getting new accounts. Until we figure that out, and it's all it is, oh, your company, here's true risk. Easier target profit, it makes it more attractive. It's going to bring a lot more customers in there. I got a $1,500 drawdown with a $1,500 target. I got this. But true risk is double what you're trading at any moment. You go to end of day drawdown. Hey, your target profit's probably a bit higher, but hey, here's your true risk. If you like 1/6, well, then it's 1/6. And again, they make their money, the longer you stay in there. So that to me transforms everything. And then we get into a simple 10 EMA strategy we're going to go over here. I hope to convey some confidence in it, executing consistently, that you're going to win 6 net well before you ever lose 5 net, over and over and over and over again.
Yeah, I like that. I want to do that.
Let's do that. Julie, you got anything to add?
I do not. That was good because I blew up a couple 25K accounts because of that.
We've been working, you and I, together quite a bit, and 250. I'm like, that's a good number. And it just hit me today. I'm like, 250 is double. We're actually risking $500
Yeah.
on every one of these trades. And today I'm just like, I see that over and over. And I want to get to some automation. And I even want to, like with this 10 EMA, that we're going to hit it hard here in the next few minutes. But 7 candles, I don't want to move my stop. I want to get up. I'm going to go get my kettlebell. I want to do 100 swings. I want to hang 30 minutes from my bar. I want to come back and check it out. I can't sit here in front of my computer all the time. There's just other things I want to do, but yet I love this. I love what we're doing. So here's 1.2. So we're going to set our risk at 125 because that's true risk on, we're going to say this is a 25K account. We got a $1,500 drawdown. So what does that equate to? That's still 2 that's still 2 micros. Okay, we actually hit 1.2 pretty easily right here. Pretty objective criteria to get in. Any questions on this particular trade? Objective, again, kind of looking at middle of the night Globex overall trend, nice little pre-market flush, higher lows. It looks bullish. This rejection right here, and we went over the first hour because remember, we're in between previous day US market high and low. So 1 hour, that just gives us another edge. We could have got in. Here's our first true bear candle kind of closing above 10 EMA. Okay, that would have won, but you would have had to ride all this volatility up and down, up and down. Is it going to roll over? Are we going to come down and test this pre-market low? This is the stuff where people panic. And again, wrong size. And if it does roll over, well, now not only did you lose your 250, but probably, I mean, you lost every bit of your 250. And then if you did have a, like this wick right here, whatever unrealized gains you had here, plus getting stopped out by this wick, if your stop was here, I mean, again, right here in that opening market, a lot of people just would not, don't put their stops down here, but we have to respect this low. It's not until after this first hour do we see some support and some confidence in the direction we're going. And then at the 1 hour, IBL, IBH, you know, kind of seeing at that 1 hour, things just lose steam. There's not a lot of strength in the bulls. These wicks right here. If Anthony was on, he'd say these wicks right here is why I wouldn't go long. And he's right. Again, volume's not that strong, losing a lot of strength, but we've got larger time frames kind of telling us, hey, trend right now is kind of down. So there's multiple reasons to take a 10 EMA. 1.2 is also chosen, and Jeremy Newsom preaches on that a lot because again, it's an intraday, it's a small time frame. The win rate, you know, is higher with 1.2 versus 2 when we're utilizing this particular strategy. Now you start getting in, you know, above this rejection, these wicks and some, you know, limit orders, that's where you get 2.0, this and that, but that's a different strategy. That's requires some different analysis, and that's just not the strategy we're doing today. So we're kind of back to is like, hey, yeah, we're going to ride some, if we get wicked in right here, we got to ride it back, but it's that objective criteria of why we got in, let it go, wait at least 1, 2, 3, 4, 5, 6, 7 candles here. If we miss the target, it wouldn't be till here where we would then move our stop down a little bit. Again, that's a reason to celebrate. Whenever you get to move your stop based on a rule, dance, because you just won. You won because you just reduced how much you could possibly lose on that trade. Because when you have those 10 1.2 wins net, well, what if those 10 losses that you had, what if they were only like 0.7 versus a full R? Well, now you actually have a little bit more. You achieve that 150, that 1500 a lot quicker. 1, but 2, the actual net of 150 10 times, you don't have those losses mixed in there. You've got smaller losses. So again, that's just math, a spreadsheet. You can kind of lay that out. But whenever you on a rules-based system, you don't move a stop out of fear, but you move it because, hey, 7 3-minute candles back, you know, splitting the difference between my original stop and maybe the wick of this candle. So maybe not going to move it down that far, but I'm moving it right to there. Well, that's, you know, from okay, we're looking at 568, 575. Hey, that's 8 points. You know, that's a reduced risk. Okay, next candle, we got 1, 2, 3, 4, 5, 6, 7. Okay, move the stop here. 1, 2, 3, 4, 5, 6. Again, believe we hit target, but here's 7. You know, if we still hadn't hit target, now we get to move our risk down to here. So now I just guaranteed I'm not going to lose more than half of an R. Double bottom. There's some other things we'd look at possibly, but we hit our target of 1.2. That's a takeaway. 1.2 is a good one to start with, especially with a trailing dot down. exit into strength. Get in the habit of exiting into strength. What does exiting into strength mean, Michelle? That means your $1,500, maybe you got a $1,200 drawdown right here. You exit into strength, you know, and take a profit of 1.2 of 25. Well, you went from a $1,200 drawdown up to like a 1,400. Exiting into strength, there's no pullback into taking a profit. So exit into strength. That's always going to push your drawdown. It's because our drawdown at $1,500 or that $2,500, that's our account. It's not the actual account you signed up for. It's that drawdown amount. That's your account. All right, 1.2, August 16th. Okay, let's do our second trade. Okay, we hit a target here. Next, what's the next first opposite color candle to close above or below the 10 EMA? Okay, we're below the 10 EMA. We got a bull candle closing above. Things are kind of resetting here by definition. We're below the 100, we're below the VWAP, we're below the green, but this is kind of where I'm not in a hurry to get into a second trade until I have some type of confirmation. You know, I am looking left here a little bit. We haven't taken this out, so it kind of makes me, yeah, I'm a little tempted. It's what I'm getting at is it's kind of reset here. You know, here's a bull candle closing below the 10 EMA. By definition, we could get in again. But a lot of times when I come up above, see, I'm getting subjective, and I don't want to do that. So if we take this trade, we just have to recognize right away, it goes against us pretty quick. You got a hammer, you got a wick, you got a double bottom. Quickly, I'm going to reverse. If I did get in, let's just play it out objectively. If I go short below this, I'm not highly recommending anybody ever do that, because again, we're looking at look at this trend line right here. We don't want to go short or long, short into support or long into resistance. But just hypothetically, if we did, 1.2 is down here. So already I decided to go into a trade at support. So everybody agree that, hey, if you lost here, journal it, write down why. You followed 10 EMA objectively, but into support. Again, you do have a lot of wicks, higher lows right here. You've got normal liquidation. Julie loves that word. You've got kind of a flushing coming down, and then it kind of bounces back up. Pretty tempting to get back in here again. Another opposite colored candle closing below. If you do, that's fine. Not a big deal. What we have to recognize is, again, this trend line. And then all we got to do, I've traded with Jeremy Newsom, and he'll do that. He'll actually, this bear candle kind of comes in inverted. He'll go ahead and move his stop for this trade and an entry right at the same time. Basically, that's his reverse. If this candle gets taken out, then basically it closes this trade, and now he's back in his other one, and then he's back for a 1.2.
But yeah, but isn't that where you get into trouble with the prop firms?
Nope.
Because
Why would you get
have one trade going as a bear and the other one you're now setting it up for a bull?
No, because you got to realize you're going to exit out of this trade when it's going against you. Then you're entering into this trade.
Okay,
Not
so
at
you're
the same
closing
time.
out that trade first.
Yes, you're
The first one.
yes,
Okay.
sir. Yes, sir. Yeah, it's
I
kind
didn't
of a
catch that,
reversal.
sorry.
You could call it a reversal or what have you, but if we've got basically two micros here, and then we say, hey, looks like I was wrong. So what? It's 10 EMA. Wrong half the time. Good support here. Well, look at this beautiful candle. Okay, if and only if, you know, because things could easily, this candle right here, rejection at the 20, you're like, it could easily roll over. So you're not going to, out of fear, close it. But it's like, hey, it's less than a full hour loss, and I've got another 10 EMA. And so this trade gets closed out when this candle comes in, and then you're actually right above this candle. And actually, you'd really have a separate order and probably just kind of look left a little bit, kind of right above here. And that's actually where you'd get in. And then again, that's objective. Would I get in this trade right here? No. Could you, if you have that plan for that snapback? And again, looking back, how many times we have that morning flush and then things go up? I just kind of wanted to show, hey, there is an objective approach, because you lose about 0.8 R here, you win 1.2. So you're still up 0.4 plus your 1.2, you're up 1.6.
Yeah.
You know, however, I'm not saying that this is sideways, it's choppy, it's indecision. When this wick come in here, in other words, I break this trend line, I'm kind of excited, but then it snaps back up, and a lot of it depends on how quick this wick was. If it takes the whole 3 minutes and then kind of comes up, it's not as strong to me. But because the fact we could not really close the next candle below this trend, I'm like, dude, take your 1.2 and go fishing. You know, really, that's what should be happening, because 1.2, 10 net days flooded account.
Well, you know how I love liquidity. That trade short, that was almost a hammer that took out all that liquidity off that trend line and pushed up.
Listen to what she's saying, everyone, because that's pretty powerful. That's, again, we got a double bottom. We're not so quick to jump into the next objectively. You know, again, trend is kind of heading down, but again, look at the size of these candles. You have this wick right here that says, hey, there's some bulls in this area right here. That's just enough reason to say, I'm not jumping right in right away. This was a win. Julie just keyed in on liquidity, which we did talk about a few weeks ago, and that just needs to become kind of second nature, but it kind of flushes out. And this quick wick coming down is indicative that, hey, there's some bigger money, smart money that is bullish.
Underneath that trend line.
Yep, right underneath this trend line, flushes out, it hits a lot of stops on a lot of folks, and comes right back up. So don't panic. Again, it's an objective reason. Here's my reason candle for getting back in. Overall trend pretty good. This is a very strong reversal pattern, and I'm just back to 10 EMA. And I got it. Try to keep it as objective as possible. If you took this trade, there's enough reasons to not wait 20 minutes on this one here. You need to see this entry become actual resistance before you really walk away, because you've got all these higher lows in here already to deal with. We're not in the habit of going short at support. We had a beautiful quick profit right here. We had a lot of risk reward area to work with. 1.2 subjective. We don't have to say, well, where do I put my target at? Do I want to try to take out this low? What about this opening low right here? Hit 1.2. Get that locked in for the day. And then either be done or be very objective, but yet if you're up 1.2, try not to ever lose more than 0.6 again. You know, at least that if you're up $200, walk away with 100. Make that a rule. So
Yeah,
this
that's a
second
good rule.
trade, go ahead.
I just said that's a good rule. Set
Yep.
how much you're going to be willing to make and then leave it. Because when you go back and try to play it, you always mess it up.
It's right. You know, so here we're going to go to 1.2. It was basically two micros. You're like, I got a trade. My name's Jake, and yeah, I got a trading problem. We get in here. Well, for me to keep my profits realized, I just cut my risk even further. I've only got 1 micro now. So a full loss on this trade is actually about half of what I've already gained. That's another way if you want to keep trading throughout the day. This trade here, let it go. When we break clearly below a 10 EMA and we come back up above it, I like to wait for it to see if it's going to hold below it again. Same thing up here for reversals. We're up above the 10 EMA, we come back below it. I want to wait for it to come back up. If it doesn't hold, then I'm looking bearish again. And again, it's just a double top. It's kind of a double bottom. Gonna respect it every time. Double bottoms, hey, they happen at support, period. You may not know that it's a support at that time, but hindsight is usually pretty accurate. All right, so let's just
Got a question.
Please.
So these trades, they're not happening super fast, but the three that we just talked about would be a pretty quick turnaround if you were getting in them or whatever. So are you doing these with a limit buy, a stop, or market?
I actually
always
have
a lot of time there.
Yeah. Well, this is quick, and that's the beauty of a simulator and kind of knowing in advance. Hey, from here, as this candle's even developing, or as these candles are developing, you're kind of like, okay, look at five and look to the right, look at the actual price, 562, 517. Okay, so about 48 points. Okay, what's 48 points mean from a number of contracts? And I'm on the micros. Okay, if my risk is 125, I'm going to speculate one contract. Hey, on the NASDAQ micros, that's 250 ticks, or that's 60 points. So that's just part of wiring your brain to understand, hey, a 50-point risk that I'm willing to accept, 50, 60, hey, with a $125 risk unit, that's one micro. But we start getting more than 250 ticks, 250 divided by 4 is a little over about $62, $63. Points, excuse me, points. There's 4 ticks per point. So that's the advantage of trading one asset over and over too is, hey, $125, one micro. Within the micro NASDAQ, that's 250 ticks. Got to divide by 4 to actually get points. But even in your long and short tool, you're entering by ticks. I'm thinking of taking this calculator and just adding that division by 4, and then I'll actually call this points for a number of contract and let this, would that add value? We still want the ticks because Ninja and even TradingView, as we enter a trade, it's still ticks that it's dealing with. So that conversion of ticks to points is as important to kind of have second nature. Michelle, am I answering your question?
Yeah, I think so. I just was talking about the type of order.
Yeah,
the
I would
quick
come
around.
I would come right in here. What I do, let me just answer your question point blank. I will do a market. I say a buy stop market.
Okay.
A buy stop market means, hey, it will not trigger until that certain price is hit, but then it becomes a market order. In other words, no, I don't do buy stop limits. And the reason is especially on this smaller time frame, I just it passes right through the order. Now, reality is on these simulation accounts, probably wouldn't happen. It was just I traded with IBKR real world before I went into the futures or the funded, and that the slippage is real, but it was way too frequent. I did not get filled, and that was generally my best setups. And then my worst setups, I would get filled. So I'm like, I did just migrate to a buy stop market and a sell stop market. One thing I will stress from a risk perspective, trading these futures, is your stop losses. They must be buy stop market. They must be buy stop market. And the reason is if you have a buy stop limit, and that's your stop loss risk, over and over again, it's going to go right through your stop loss and you're not going to get filled. I would rather take the slippage and lose a little bit more on that trade than have a high volume candle come through. And the way it does, you won't get filled. You won't. And then you're just going to blow up your account.
Hey, Jake, I'm going to bounce.
Bounce. Well, you know what happened? You didn't bounce very well off the concrete the other day, so be
And that's
careful.
why I'm leaving a little early. I'm a little sore.
Okay.
Oh, don't make me laugh. It hurts. All right. Good night.
All right, see you, Julie Bean. All right. So I hope that answered the question. I actually just inherently buy, stop, sell, stop. On my take profits, my stop losses, and my entries, depending on if I'm short or long.
Yeah.
So entry, buy,
Okay.
stop, take profit, stop. Yeah. But trigger and then market. Trigger, then market.
And
Laura?
I have another question.
Sure.
I'm kind of changing gears on you. I got a couple of them just in general. You use a dark background and I use a light background. So sometimes it's hard for me to keep track of, or like theme. What product are you showing right now? Is
Trading
it
view.
Trading View on top of something?
No, this is just 100% trading view here. Now, yeah, it's on top, but over here is Ninja.
Okay,
And
that's what I
kind of
thought.
got that gray background, same 200, in other words, my moving average is the same color. Background, for the most part, is the same color. You can kind of see them both there. I kind of want some type of consistency, at least across the platform, especially where I do share
Yeah.
my screen a lot.
And then what broker are you hooked on your Trading View? Do you work one of the
Trading view is
brokers?
Trade of 8, you know,
Okay.
via Apex. My Apex accounts, I trade within Trading View. But with Apex, you're going to go through Trade of 8 for that. That is your data source, which
Right.
it allows you to integrate with Trading View and Ninja. If you go through Rhythmic, different data source, you cannot integrate with Trading View, and you're kind of limited to the Rhythmic platforms and Ninja. So that's where they're just different flavors for different folks. But what I'm doing is I select the Trade-Avate account within the APX websites, and that gives me the option to connect with TradingView. I'm just migrating to Ninja. Want to become that one platform is good, especially now that I'm using a little bit more bots, trying to get that part up and going. I'm on a Windows 2022 server, what you're actually seeing here on Ninja, and my computer's powered off. Ninja will keep up and running. If my power goes down, my trades are all still protected, things like that. So there's just different reasons. We will talk about that in the future if interested, by all means, because it's even something to do. If I had to do it all over again, I've got some regular income coming in when I exited the W-2 space, which is number one rule. You've got to have income regardless, because it takes a while to be consistently profitable. But if I had to do it all over again, Michelle, Kevin, anybody listening, I would have spent a lot more time overall, larger time frame market structure, swing trading, and Matt DeLong is push button technology, and like the bots, they even existed back then. And just together, bringing those two together, and I would have kept working my W-2. I had other streams of income coming in, so I was able to make that exit, you know. But if I was to have to start over, I mean, for one, there's a song that's about that. Man, I'm blessed to be born in America. But if I had to start it over with just my wife and my kids, I would swing trade, and I'd probably do some bot trading. Swing trade in like real world IBKR, you understand, like the Tesla AMD space. Check it at night, master that support and resistance trend, and have a couple bots going. 6-9 months later, you know, have some positive cash flow going. Because everything you need to be successful at day trading, it's like even optimization and understanding what these bots do. It's teaching me so much, you know. I've had them for over a year, but I've just never, because of the change in platforms and going from equities to CFDs to no CFDs, just to futures, the bots all had to be redone in a different platform. They've settled. They're doing pretty good. So I'm like, wow, why did I wait so long? I want to get back into the bots. So I'm doing that, and I'm excited to be able to kind of share that journey over the next few months. However, what I believe we're accomplishing here today in particular, if we don't have a defined risk plan and understand our true risk, it doesn't matter how good your strategy is and even how disciplined you are. We don't have the right risk in place if we don't understand what we just talked about today. Let's nail that. Let's continue to refine 10 EMA and be more objective. And then you're going to see that winning over time is a good grief. When I look back over the last 2 to 3 months objectively and execute 10 EMA, as Jake's kind of sharing, it's like, dang, I funded these accounts and my risk was always comfortable. That's what I believe is obtainable.
Yeah.
Okay.
And then I don't want to take us too far off the topic again, but I still have that GUI account on that RLT thing, trying to make it work. I just really don't like GUI at all. And so do I need to talk to somebody about that account? Is there any way they're switching it around or do something different with it? I don't know.
Yeah.
I really do not like that combination.
No, I hear you on that. And my hands are kind of tied on that because that was purely like an RLT origin. I mean, that our industry change to kind of force that. And they've made a business decision, RLT themselves, where they don't even offer the GUI trader anymore. They are an affiliate they are an affiliate of like Apex. And so from a real life trading customer base, that's the product they offer their customers for the funded training space that we're doing. So we're in the right space. To take that account to funding, that's my understanding. It's been a few months that they were kind of going to honor those, but they definitely were not offering anymore. I literally just intentionally let mine expire the other day. I was going in doing a couple trades. I'm like, hey, send me. They were still in the training, but they had pretty good balances. But I'm like, they're never going to come into anything. To pay over $1,000 to have one of those. Now that I'm exposed to all these other prop firms, the competitive nature, I'm like, who would pay $1,000 for a 100K account? So I don't know if I'm answering your question because I don't know what the resolution is as far as you can easily just let it expire. No harm, no foul. It's done.
Yeah.
But is there a refund, this or that? That I don't know. That's a real life trading thing.
Yeah, I don't even know. So I could get in touch with them and they could talk to me about it. So
yeah, that definitely. Because I think I don't have evidence or anything in front of me, and I don't want to start any rumors, but I do know that through a lot of the transition, there was a lot of the same concerns, and I think a lot of folks did reach out to RLT, and there was a lot of refunding and stuff that did take place back during the transition. It's a long time now, so I don't know what that would be like,
right.
the
Okay, I'll
discounts.
just reach out and track that down.
Yeah, the discounts and stuff that we have when we start looking like at Apex, Blue Ski, Top Step. I mean, there's a whole bunch of, when the change of U.S. citizens being able to trade the contract for difference or CFDs of the U.S. equities, when that basically became illegal and went away, it really transformed the landscape because now good, valid prop firms, it's competitive. I mean, it is. It's a competitive environment, which is kind of good for us as customers because instead of paying over $1,000 for that GUI account, 10% target profit, $6,000 drawdown, you can get a discount and pay like $40, for $150.
Yeah, somehow I'm not paying for this account. I really don't know where I'm at in it, so I just need to talk to them.
Yeah,
I'm not trapped in a money problem. I'm just trapped in I really don't like this platform.
Yeah, I just literally got my 7-day warning and I'm like, delete. I deleted the email and then I got my notice, hey, hard breach because of 30-day inactivity. It was intentional. I'm like, I'm just wasting my time with it myself. So I literally did that this past week. I just let mine expire and it's done.
Okay. Well,
So
I
today's-
gotta run, but thanks for a good discussion tonight.
Absolutely, absolutely. Keep in
Okay.
mind, keep it objective, trust the 10 EMA process, look for that previous US market high or low. If you're in the middle of it, wait an hour. There's very few exceptions, but if you've got that continued trend when the market opens, then there are some opportunities, but as a rule, wait for those two conditions and then look for your most logical 10 EMA entry. You're going to be impressed of how successful of a strategy it is. Just be
Good.
consistent
Would you
in how you execute.
copy your notepad into the chat before I leave? I have my own rule paper going, but I'd like to take some of your language there.
Sure. It's not a book, which is rare for me, right?
I don't know about that.
All right, there you go. There you go.
Perfect.
All right, that's it in a nutshell. I just dropped it in the WhatsApp, so be
Okay,
like,
got it.
all righty.
All right. Well, good night. Talk
Hey.
to you again next week. Bye.
Sounds great, Michelle. Bye-bye. We'll see you. All right, Kevin, it's just you and I. We're gonna probably wrap it up here. We talked about a lot of these things last night. And I really wanted to kind of go through quite a few different, so I wanted to kind of show just in the past week. Let's do it real quick. Let's do it real quick. It's still being recorded. You got a minute?
Yeah, I'm good.
Okay. I want to take this derailer out of here. We hit a target here on 16 August. Got our 1.2. We don't need to like hit objectively every 10 EMA candle. I think most people listening to this video right now would understand, hey, looking at this trend, not worried about this one here. They may not even be worried about this one here. It's just like, hey, we're still below VWAP. Overall trend is down. We kind of want to see that broken. Objectively, we're up above the 10, we're below the 10, double bottom. Objectively, it is a good candle. And I'm taking these a lot more now with success. But if we want to wait for it to come back up above VWAP, one, breach, 10, 100 VWAP, retest, this is pretty nice in here. And then you could literally get in up off of this candle.
Yeah.
If you get in above this candle, even the 200 here, I mean, again, here's your good valid pivot point. Targets there. All we got to do is you wait. If we get wicked in here, okay, you got, let's say like right in there, we get wicked in here. 1, 2, 3, 4, 5, 6, 7 candles. So you wait here. Okay, what happens when you get here? We just now report our stop. What's that?
I'm sorry, you pull your stop up.
Exactly. Let's get her down to like 1.2. 7 candles right up in here. Our full risk is down here. Here's really a very solid pivot point based on what we got. I'm actually going to split the difference between original stop, and actually I want to kind of hit this 20 EMA is about where I would start, and this pivot point. I still want to give a little bit of room for it to kind of continue down. And then 1, 2, 3, 4, 5, 6, 7. Okay, we hit target on the next set of 7 candles. But if we didn't right here, not out of fear, but kind of a rules-based approach, now we're getting up to where we're going to move that stop up. Hey, guaranteed we can't lose. Okay, stick with the 1.2 is my recommendation based on this strategy, this time frame. The win rate, which has got a lot of data behind it from Jeremy Newsom, but also let's get in the habit of exiting into strength with this drawdown conversation that we had today. Get in the habit, if we continue to move a stop, we like it. It's like, okay, now I'm going to play the breakout here. Well, we move right above that wick, then how many times we make a slightly lower high here and it rolls over?
Yeah.
Or we move it up here, we think it's really going to go, and it never does. And then wherever we decide to finally take some profits off the table, which is good, even if it's more than 1.2, but all that drawdown you're giving back.
So let me make sure I'm understanding here. The market's going up on this trade. it looks like it's going to hit your target, and you're like, I think there's enough momentum, I could probably bring it up past 1.2. When you do that, how far up do you bring your stop loss then? Do you bring it up so you're guaranteed to make a profit?
Well, that's a good question. If I'm going to be moving my stop up because I've got a lot of strong buyers in which we don't even really have evidence via volume, strong, see how volume's even kind of going down. So
Yeah, it's kind of
1.2 is the rule. 1.2 is what I'm saying. You know, and even kind of looking left here, we're back up above the 200. 1.2 is your safest bet. But if you do, and to answer your question, you know, we able to kind of see some good consolidation. I mean, you've heard me kind of say it quite a bit. Hey, as long as I've got this beautiful space between my 10 and 20, hey, I'm going to go ahead and stay in. Okay. I am good with that, and I still respect this space a lot. The challenge, and again, it goes back to what if I've got 5 micros, 3 micros, which I just don't anymore, grasping the true risk at stake here is double. No, exit into strength. We will progress with moving stops, looking at targets, previous, Globex high is a beautiful target. We're already above the previous day of the US market. We'll look at that, or things just really flatten out here. Hey, we didn't exit here. We're thinking, hey, maybe it's going to continue, but lower high here and this price area through here, I'm definitely not going to allow. I don't want to write it back down, even though there's good support at the 100 EMA. So at a minimum, I'm out here. But what happens when you get out at 19,629? Even if you get out here below this bull candle, 629. Well, look where price did go, 62. So that's 33, 34 points.
Yeah, it's a lot.
Yeah, and if you got like 3 or 4 micros, yeah, your drawdown on a small account is just cut in half, and yet you won an excellent trade. That's another reason I think 10 EMA is as pertinent as ever, and it just cuts out the noise in a lot of areas. Stick with 1.2, get in the habit of exiting in strength. 1.2 has a lot of data behind it from this particular strategy on this time frame with a high win rate. You're not going to win all the time, but you're going to win more times when it's objective and you follow your rules. And then wait about 7 candles, look to adjust your stops, which you're never going to lose that full R. The moment you get to adjust that stop, do it based on a rule, not necessarily out of fear. If you're in a trade or something like this, a little bit different situation where you may not wait the full 7 candles because you're actually actively engaged in the trade, thinking 10 EMA, hey, things are going to roll over and you want to get a piece of that action. You see some rejection pretty quick. That's that actively managing. But your risk is already pretty high because you're getting in at possible support.
Yeah.
There's some reasons to think it could roll over. There definitely are. There are some people that would take that trade. But if you do, just understand that liquidation that Julie was talking about, this quick down and back up to this trend, and then it just continues up, and it's a huge day going along. So this particular strategy, what I encourage people to back trade, study, define that plan, and just set 1.2, and then reduce that maximum loss, rules based over time, wait that 1 hour, or if you breach previous market, US market, high or low, within that first hour, look for your 10 EMA setup. Don't enter short at support and don't enter long at resistance. One other thought, like you're up in this area here, and if you've already got your 1.2, well, again, let's take our profits. We've already made a new high of the day. we don't want to be counting on having to make newer highs each day. So if you got a 1.2 here and a 1.2 plus here, be done. Be done. Because
I gotta keep trading though.
I know it. But that's where you go to your paper trading or get in a separate evaluation count that you have separate. But let's just look at previous day high is like below this orange line. And here's Globex low. Market opens here in between. So it's 6:30, 1 hour's right in here. So we're not trading until 1 hour. And this is 19 August. Okay. 1 hour, 6:30 is right in here. So we avoided all this chop. Indecision. There's a little liquidation, that flush that Julie talks about that's really well. 1 hour happens right here. We got a little more consolidation. Again, look at this moving average right here. That's our 50. Okay, it's trending up. We're above our VWAP. Our 100 EMA is trending up. Oh, actually, it's going sideways here, but we're looking at it holistically here. But objectively, here's our first bear candle past 1 hour, closing above the 10 EMA. We don't get wicked in here. We're not in this trade until this wick right here. But a beautiful bounce right off the 10 and it continues up. So again, objectively, we waited 1 hour. Here is the first bear candle to close below the 10 EMA. And we get below these candles, below this strong moving average right here, because we see some support through here, 1.2. Little tight. There's like 1.3. So we're little shy of this Globex high, which should be a valid target, but a little bit shy of it here. It comes back down, and this is where you go like, okay, if you move your stop too quick, see how you just got wicked out at the stop? Hey, guarantee I can't lose. Move your stop right here. You know, then you just got out, and maybe you get in here again, but now you've lost 0.8 of your target. So we don't want to be too quick. So what does that look like from a rules-based trade management perspective? If our stop is clear down here, you know, if we had it a little tighter, you know, 1.2 is it's hit right there. I don't do real tight stops. I like a little bit of loose, and if I can get below the low of the day, hallelujah. But later in the day, candles are a little bit smaller. Here's a good bullish move. I'm below, and this is the rule. I'm below the last big bull move prior to this bear candle. Basically, these three candles together, not necessarily this one, but I'm below my 20. I'm below my moving averages. I'm well below these moving averages, and I even get a bit below this one. So that to me would be a logical stop. It's a little shy of hitting 1.2 too quick. But you kind of hold it. So let's count our candles. We don't get wicked in until right here. So 1, 2, 3, 4, 5, 6, 7th candle right here. Okay. So it's a rules based, not fear based. Can I move my stop now? So if my 7th candle is here, my original stop is here. Here is, no kidding, a valid pivot point. At 7 minutes, I get to move my stop about 25
between
way up, which is not necessarily at the bottom of that, but there it is. There's my new stop. Okay, and then I've got 1, 2, 3, 4, 5, 6, 7 more candles. I got to move my stop again. Well, here's actually my next valid pivot point. I split the difference between this one here and this pivot point that we actually confirmed as support. Splitting the difference now, what does that look like? Well, that guarantees I'm not going to lose at that point. Now, that's time-based. Where was that at actually? 1, 2, 3, 4, 5, 6, 7. So it's right in here. So we'll actually put that stop right underneath that 7th candle. So it gives us a visual. We can go back and study, hey, what was my stop movement plan? Hey, it was actually about right in here. Did I follow the plan? Okay. Now we're looking at 7. 1, 2, 3, 4, 5, 6, 7. We can move our stop again. Okay. Again, we're just looking at 7 candle intervals, and I get to split the difference here. So here's if this is the pivot point that I was looking at before, well, here's the next one. I get to kind of move up about half of those. You know, I don't want to just tighten it up too much, but here's really, when this comes through, here's our valid pivot point. This right here is where I kind of want to hit target. Because now I've moved my stop. You know, this is a big flush. This is 12 o'clock Eastern Standard Time. I mean, that's where, hey, you're below your 20, you're below your 10. You know, we hit this. If that's, I don't even know if that's a valid 50 SMA on the day. I don't believe it is right now, but a lot of resistance right through here. We got this rejection wick right here. This is where, you know, like this morning, I had 2 candles like this. I was short. I waited anyway because I moved my stops systematically just like this. It did roll up and hit my target. But this is where you got to make that decision there, because we've got to understand that, hey, here's a valid pivot point, but it did get taken out here. But if we hit the target here, which it looks like we did, then it's a winner. Definitely a winner. So, but again, we don't necessarily want to, we don't get points for staying in the trade for a couple points when we're making new highs. And here is some normal liquidation, comes down, but looks very bullish if you don't get taken out here. But both these stops were taken out. And so, and that's where, hey, if this is 1.2, hey, you already, well, we haven't got here yet. A lower high here, but when this kind of comes up and this candle comes in to take this out, that might be a good reason to kind of start tightening up some stops also, because look at the amount of time that has went here. And we just see this liquidation that does happen. So that's just going to have to come with time. But objectively, if you move your stop every 7 minutes, once this candle kind of come in, if you happen to be a little bit shy, that's where I definitely, I would then move this stop up into like this pivot point right there. This candle kind of come in, this next candle come in, the wick weakened. I'm watching this big body develop. Hey, at a minimum, where I'm probably on this trade, if I didn't hit my target there, is I'm like, hey, at the below the 10 or maybe even on the 20, if this bull gets taken out, because I see this over and over, I'm going to go ahead and lock in 0.8 R. You know, yeah, did I lose a little bit of drawdown? Yeah, about 0.4. But that's okay. It's okay to have a little drawdown. But all we talked about here is, what if we did not hit our target right here? How are we going to manage that? Rules based to kind of move our stops up. We got up into here, about into here, and then possibly got flushed out. That's worst case scenario. But what's worst case scenario? Hey, you realized gain of a half of an R. And because your objective on your other trades, your drawdown is still staying up in that 12 to 1500 range. So that's a way, you know,
we discussed about this methodology, last night, about solely pulling that up on every seventh candle, right? And I did follow that strategy today, more so than I have, haven't really been doing that. And I would say I hit more of my targets today in the trades I did than I usually do. So for me, I'm already seeing that result.
But we're just validating what is published. I mean, again, credit to Jeremy Newsom. That's what he kind of preaches with the 10 MA strategy, which they're kind of the proponents of that. But I also kind of went back to some of the fundamentals on that. And I'm like, I'm tired of sitting here, watching smaller time frames, even smaller than 3. I'm like, no, this is a good strategy. I'm going to let it play out. And it's just going back to the basics, waiting that. I've done that multiple It's like even this morning, just get out of the shower, looking at it. We breached previous days, high or low. I'm like 10 EMA, I'm good. I didn't think twice. And then 20 minutes later, I move my stop. I'm like, I don't care if I don't do another trade today, I'm losing less than an hour. And I've got my bots going and stuff, so I had other things going on, but I'm like, no, it's objective. I'm getting in, and I hit the target with less than it was less than 30 minutes. I moved stop, I think, twice. But yeah, you're right. And that's magical. Let's quickly. I mean, again, we want to figure out how to ride these momentums, but if you win 2.4 hours and you got to go do other things, that's a win. That is a win. So here's Tuesday, 20 August. Previous day's high is right here, roughly at, say, 872. You look at that price, 872.75. It's breached right here. So quickly, we're able to trade 10 EMA. Okay, is there any bear candle closing above the 10 EMA? Nope, nope, nope. Indecision, it's tempting, but you're right here at a lot of resistance coming down, but by definition, it's not a clear bear candle closing above the 10 EMA. Plus it's bull, big bull move. Okay, comes back down, bounces off the 10. It looks like, hey, we might have another bear bullish trend. Rejection right here, lower high, bear candle comes in.
And goes through all those support.
Yeah. All the support. So objectively, you know, instead of getting in right below this, which we still could objectively, regardless if you get in here below these bears or right below the bull, which is the strategy, you want to get your stop at least around that 20 if possible. We're above the 10, make it to the 20. We're kind of a largest area here, and actually let's even go above this wicker right here. This becomes another one of those. It might be tough to get 1.2, but objectively we're in there, and it's all going to depend on where that stop is. But again,
you got it there. Yeah,
got it. You know, and again, so objectively, I keep repeating that word because I want to take the decision. I want to take the subjectivity out as much as possible. I'm above my 20, and then we above the 100 at VWAP, but really kind of this wick right here. You know, we've got a lot of space between our stop now and where we actually got in. So now we get to move our stop from here halfway down to the top of this wick after 7 candles, if we're still in the trade, you know, and then it did eventually down to here, you know, but we hit target again, 1.2, much more than that. If we would have pushed it down below here, immediately it goes against us. And then you lose big time, you know, all your drawdown plus more. But again, 1.2 objectively, we entered below this bull candle. If we get in a second one, we're up above the 10, we're below, back above. Okay,
right there, that bear candle. Yeah.
Yeah, we could start looking at getting in here. We don't get, if we look at this candle, then you got to realize you got to ride this down because you got wicked in right here. So what does that look like? Again, objectively, so we go long above, probably above this wick right here, above this first bear candle closing above. We're below our 10, we're below our 20, but we definitely would want to kind of see this right here. So with this, and you see why this is a valid pivot point, not here.
Yeah.
You know, earlier, I think before day, we had a candle like this. We're like, nope, that's the pretty big stop. It would have worked, but here we do want to kind of respect this area right here. The volume profile was turned on. You'd see a lot of volume right here, and price comes right back down into this area, but it creates a higher low. So even though we got wicked in right here, and again, we kind of set at 1.2, let's just see from a trade management perspective what happens. So we get wicked in here, 1, 2, 3, 4, 5, 6, 7. Okay, 7 candles. There's really no place to move my stop yet, but kind of like sweating a little bit of bullets. But I'm like, oh, high or low, look at this bull movement. I'm back in the money. So we're not moving it up out of fear, like tightening it up here, because then even though we would have not lost a full R, but here's our 7th candle. Where is a valid pivot point? Valid pivot point remains right here. a little bit of patience, higher lows come in. So you're still in the trade, and immediately it starts working in your favor. Okay, so now we got 1, 2, 3, 4, 5, 6, 7. So now we've got another 20 minutes. Okay, now where do we move our stop? Do we want to kind of think about coming up into this area? This, and I think it's valid at this point because wicked in, wrote it down, a higher high, a lower low slightly, a higher high. We kind of got what they call I call it a megaphone. I've heard it, but not too much, but higher highs and lower lows, a lot of volatility. But because of this lower low here and a higher high here, rejection here, VWAP, 100 EMA, that's where it starts getting a little bit of challenge. Big bull move. You know, this rejection at VWAP, that's a reason, especially after what, 40 some minutes or been in the trade an hour. I'm not going to come back into red at this point.
Mm-hmm.
Does that make sense? So we're looking at wicked in here, 1, 2, 3, 4, 5, 6, 7th candle. Okay. Valid pivot point. Going to leave my stop where it is. 1, 2, 3, 4, 5, 6, 7. Okay, I come back. What's going on?
Back down.
Big bull movement, lower highs, VWAP above it, rejection of VWAP right here. And I'm like, let's go ahead and either a small loss here. Let's get out because we're going on an hour. Wicked in the red, barely stayed green for a minute, back down, create a new low, and then 1, 2, only 2 bull candles in the green, and then everything turns bearish on me. Hindsight is always more accurate, but it's like, you know what? Probably going to cut my loss there. Drawdown is not impacted by the full R here. Drawdown is only impacted by the high
If
of
it
this
had gone,
to wherever you exit. That's your drawdown, what you're going to give back, assuming you get out maybe like right here at the 10. You say even if you wait for this candle here, but you're like, you know what, I'm not, if this candle gets taken out after 1, 2, 3, 4 bear candles, you're like, oh, maybe it'll bounce off the 10, back up above VWAP and go up. But if this candle gets taken out, or even maybe this one, you're like, okay, this wick comes in, rejected at the 100, I'm out right here. So let's just say, hypothetically, that's our stop right here below this candle. Even then, hey, got 0.12. I lost drawdown, but I do have some realized gains for the day. And again, realized gain, losing drawdown is a lot better than a realized loss plus all that same drawdown. You know, we got to not lose perspective, but we're managing the drawdown when they're only giving us a $1,500 account. We think it's 25K, but it's not. And we got to realize it's double the risk. You know, we say, hey, you can't lose more than your R. Sorry, that's just not accurate, Jake's perspective. And I could be wrong, but that's how I look at it. If I miss target and I lose I am exposed for a rollback to that full R. As long as that stop is still at that full R, my risk at that moment is double my R, bottom line. And then that helps me understand risk management and where I really can be objective in my trading. And it's like, hey, with a $1,500 account, it's not 25K, 1,500. Hey, 125 is actually, you know, what's a 1% of 100,000, you know, is $1,000 risk. That's kind of the pretty common seasoned trader perspective. A lot of things that even real life trading will teach. Well, what is 1% of 1,500? That's $15. So our risk is 10 times. I mean, we're still talking, well, even when we're risking $150, we're talking 10% of our account.
Yeah.
You know, that just seems ridiculous. But what is 10% of 1,500? That is $150. Now the account is 25. If you look at it that way, what is 1% of 25,000. A
25.
little bit different, but that takes you up to 250. But that's where it's a misnomer, because do you have a $25,000 account? No, you do not. You have a $1,500 account. You've got the buying power of 25,000, but you don't have $25,000 account. Of course, who wants to lose a full $25,000 account? So that's why we break it into 1% of that account. But you got to realize the only account you have access to execute a trade with, take profits and losses, is $1,500. Well, 1% of that is 15, and you can't even buy a micro for that. And that's where, to me, and I'm validating it across all different account sizes. If I can identify what true risk is, divide it by 6, that's my true risk. Here, 250 is 1/6 of 1,500, but true risk is a little bit different with the intraday drawdown. But Apex, or this particular firm, or most firms that actually do have that intraday, they kind of make up for it because it's a low cost account, 1. 2, that target profit, especially the 25K, is 1 for 1. Where like Top Step, $2,000 limit, but a $3,000 target. And plus you pay a little bit more for the account, but it's end of day. So true risk is actually really what you're risking under nominal conditions. So, you're always going to get me, and I'm going to keep talking until you say you got
No, you're good. No, that was a lot of good info tonight. Thank you.
You got it. Let's end there, and I'll get this recording dropped in there. But hopefully, and everybody else that's listening to this, just try to look at the 10 EMA objectively with those starting conditions. You're not going to take every 10 EMA, but kind of some of the things we talked about, go long as support, utilizing 10 EMA, go short, when you see a double top or you're at resistance. And, but be consistent on your entry and exit criteria and trade management and your risk. Just go through, do a week at a time, 5 days, and maybe just do 1 or, maybe 2 trades, in each day, and then walk away. Don't sit there and go through every opportunity throughout the entire session. Find out, hey, in the first 2 hours or that first trade, I'm 7 for 10. Or if I do 2 trades with some tighter risk management on the second one, hey, I actually 1.2 plus 0.5 average. Or maybe you do net 2 wins most days. That is going to give you the confidence you need to then just start executing objectively. And who cares if you lose? If you understand true risk, who cares if you lose the full R? When you're winning more over time, you're going to get your drawdown back up, and you're going to win again. It's over time. So I'm going to leave it with that. I'm saying the same thing over and over, but I really want to drive that point home. That true risk is the paramount within the Apex space that I think most people listening to this video are trading in. And we got to understand true risk versus the actual risk unit that you might be trading with. Make sure you got the correct size.
Thank you, Jake.
All right, Kevin, you have a great rest of your evening. Thanks for showing up today.
You as well. Bye.
All right.